Okay, I'd like to call the meeting of the Budget and Finance Committee Commission to order. Doug, can we have a roll call?
Thank you. Sorry about that. Commissioner Jesse?
Aye.
Commissioner Solomon?
Here. Here.
Commissioner Samples?
Here.
Commissioner Conroy?
Here.
Commissioner Marin?
Here.
Chairman Woodham?
Here.
And Commissioner Johnson will not be attending tonight.
Let's take a moment to do the salute to the flag. Stand. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Let's move to item D, approval of the order of agenda. Are there questions on the order? If not, do I have a motion to approve?
Motion to approve the order of agenda?
Do we need roll call for this, or can we just do it by acclamation? I don't think we need a roll call, do we?
We don't need a roll call for that.
Pardon?
No roll call is needed for
Okay.
that.
All in favor, say aye.
Aye.
Any opposed? Motion carries. Blue folder items, there was one blue folder item which was sent out. I assume everyone received that, correct? The consent calendar comes under item F. Two items under the consent calendar. The posting of the Special Budget and Finance Commission meeting for tonight and the approval of minutes from March 10 and April 14. Does anyone want to change that, pull anything from the consent calendar? If not, do I hear a motion to approve? Accept?
Motion to approve. Second.
All in favor, say aye.
Aye.
Any opposed?
Sorry to interrupt. I was kind of looking at something else. Did you guys already go through and approve the blue folder item for tonight?
I'm sorry.
We didn't approve the blue folder. Do we approve the blue folder items? We're just going to approve it.
Oh, okay. No, we did not. Okay, back to the blue folder. Do I hear a motion to, do we accept or approve? We accept the blue folder item?
Mr. Chair, I have a question. Has this already been delivered to the city council? Are we just reviewing it, or is this something that we need to make comments on? Does anybody know?
I do not know.
Blue folder item?
Yeah.
It'll be discussed this evening.
It'll be part of your discussion item for the second discussion item tonight.
Okay.
So that's part of that item.
Okay, thank you. Okay. Then move to accept the blue folder item. Second.
All in favor?
Aye.
Opposed? Motion carries. Okay, back to, we accepted the consent calendar. There are no excluded consent calendar items, so item H, public participation on non-agenda items. Do we have any public, persons from the public who want to speak, or any Zoom connections?
Emails.
Email.
We do not have any e-comments.
Okay, there being none, then
And I don't believe we have any public participation.
okay. And I don't think there are any items continued from the previous agendas. So we move to items for discussion prior to action. And the first of those is item J1, the city treasurer's quarterly fiscal report. Is Stephen on Zoom?
No. We've got Nilesh tonight presenting. Gary? We've got Nilesh over here presenting.
Okay.
Good evening, Commissioners. Neelish Mehta, Deputy City Treasurer, here to present the third quarter report for the Treasury Department. Good to see everyone in person. Within your report, you'll see the following items: the portfolio summary, reporting guidelines, the report by FHN Main Street, which includes the portfolio summary, policy compliance, activity report, and economic and market update. And that should be starting on page 21 of your page 21. And then the PowerPoint presentation, which I'm going to be presenting, goes over the investment reporting objectives and guidelines, policy compliance, quarterly performance, historical book value, cash flow analysis, portfolio book yield, maturity, distribution, trading activity, and finally the fiscal impact. As we have talked about this in the past, the three key investment objectives are safety, liquidity, and yield, in that order. The Treasurer's Office maintains the city's cash flows while earning a competitive rate of return on the investments within the constraints of the city's investment policy and state law. And then here are additional reporting guidelines to keep in mind that it is the community's money, and so we have to act accordingly in a responsible stewardship capacity. And it is our intention to earn a reasonable rate of return on the city's investments while preserving capital in the overall portfolio. It should not be the goal to earn maximum returns on the portfolio, as this would expose the city to an unacceptable level of risk. And then here's some additional guidelines. When failures occur, when policies are not clear, when they're not appropriate, when they're not followed, or oversight is inadequate. So here's some questions to ask yourself, and I've talked about this in the past. Do you review the investment policy? Do you understand the investment program? Do you receive periodic investment reports? Are they clear, concise, and readable? And finally, do you fully understand them? Here's a summary of the policy compliance for the quarter. As you can see from the right column, we were in compliance for the quarter with regards to our investment policy. U.S. Treasuries, we had about 24% of our portfolio. Federal agencies, 42%. In LAIF, we had just over 20%. And CDs, we had almost 2%. And corporate, 11.4%. Liquidity on our portfolio is 34.05%. And here's the performance for the third quarter. You'll see a summary in comparison to our previous quarters. And you can follow that third quarter column and compare it with the previous years. One important thing that you will see is that the LAIF yield at the same time last quarter was 0.36%. This quarter, it did drop to 0.22%. So here's the historical book value by fiscal year. You will see that at the end of March, 98.1 million, which is comparable to our portfolio back in 2019 at the same time. So, and here's a graphical summary of the historical book value going back to 2009. And you'll see the ups and downs in our portfolio as the fiscal year progresses. Here's a summary of our cash flow analysis that we do, and basically the debits versus the credits. And in comparison to our previous fiscal year, Month-end portfolio book yield, you'll see that, in comparison to April 2021, it has seen a decline, but it is currently at just under 1.4%. Maturity distribution, we have almost 35% of our portfolio in investments that are maturing within 0 to 1 year, and so on. You'll see our portfolio spread out. And here's the trading activity for the quarter. We had 1 purchase, and we had a total of 3 redemptions for the quarter.
Nilesh?
Yes.
So since the beginning of the year, that's 1 redemption January, or excuse me, 0 January, 2 in February, and 1 in March. I noticed when you were going through the charts, the corporate notes had gone and thinned out somewhat, as far as our position was concerned. Were those redemptions of corporate notes, had they reached maturity, or did we get out of position early?
We did not get out of position early. So the investments that were redeemed were maturing, so there was no early redemption.
And were any of those corporate notes?
I would have to look at that. I don't know. off the top.
Okay. Is that an intended action to reduce our position within corporate notes?
No, just basically what we did is as the investment was maturing, we redeemed it. So that was part of, the constraints of that particular investment.
Okay, thank you.
Sorry, my PowerPoint just ended. Fiscal impact for the quarter, interest earned year to date, just over 1 million. Of that, we contribute 60% to the general fund. So that comes out to 613,000 contribute to the general fund. We have budgeted a contribution for the entire fiscal year of 750,000. So we are on track to meet that budgeted amount. And finally, just to reassure, the city treasurer maintains the city's cash flows while earning a competitive rate of return on the investments within the constraints of the city's investment policy and state law. So that is the end of my presentations. Any question? Yes.
So yeah, we had the 1 purchase and the 3 redemptions in the first quarter. What was the, what kind of rates did we get outgoing and coming in?
Let me pull up the report here. I have to look at that. I don't have it off the top of my head, but I can get back to you on the exact return we were getting and the return that we are going to be getting. I have to find that.
Okay. How would you get that information to us?
I can email it over.
That's fine.
Yeah.
Thank you.
Nilesh, in the FHM presentation, the total return performance since inception is trailing the benchmark. Are we chalking that up to our Black Swan event in 2020, some of the economic instability? Or did we find ourselves not necessarily out of position, but having to reallocate and trailing benchmark as a result of shifting our priorities? Do you have an insight into why we would be trailing benchmark there?
So the chart that I'm pulling up on the screen here is the quarterly comparison. You'll see the benchmark yield is 0.59. So our return is significantly higher than the benchmark yield.
I'm looking at the chart that has total return performance, not the quarterly performance or quarterly comparison. Sorry, I don't have the page number. You've passed by it, but it's a bar graph that shows 1 month, 3 month, fiscal year to date, 1 year, 3 year, 5 year. And then it has a representation of portfolio and benchmark and variance. And it shows since inception, we are trailing the benchmark by 0.065%.
Sorry, I'm trying to find which chart you're referring to.
I'll shout out when you come to it.
Page 62.
Page 62.
At least that's a benchmark comparison. I don't know if that's the one you're looking at, Commissioner Saul.
There it is. Total return performance. Keep scrolling down. 63, please.
63.
63, okay.
There you go. That's the chart that I'm looking at.
And
Total
you're,
return performance is the header.
okay, and you're looking at which column are you looking at?
So you have the representation at the bottom of the graph that says from 1 month, reading from left to right, to inception on the far right. And it has our portfolio, it has the benchmark, and then it has a variance.
But actually, our variance is
So
better than
better than benchmark.
Outperforming.
Okay.
losing less, right?
Losing less money, is that
Correct,
the
yeah.
representation there?
Once you go below zero, then it's actually.
Losing less there?
Yeah.
Okay, good deal. Then that's a good news item. Okay. One more question, and you may or may not know, but for these types of securities that we trade, do we know if FHN receives compensation for order flow, for our order flow?
FHN receives a fixed amount of compensation from the city, and that fixed amount is set based on our contract with FHN. They do not receive any additional compensation from any of the securities that are purchased or redeemed.
So I'm not saying this from the city, talking about compensation from the city, but when you trade securities through brokerages and to send orders through those brokerages, sometimes there is a rebate to someone like FHN for trading through an organization.
Okay.
That's order flow.
If you're referring to trade credits, there was a system in place where if FHN receives a trade credit, we get reimbursed that. So whatever our fixed dues were to FHN would be deducted by that amount of the trade credit.
So if they bought and sold securities through XYZ brokerage, and then they received a rebate or some sort of compensation for using that brokerage, that compensation would then flow back to the city as a credit to us.
That is correct. It's called a trade credit. And if they do in fact receive a trade credit, we were having that in the past with CDs that they were purchasing, then we were seeing a deduction in the amount that was owed to them. So that fixed amount was getting deducted by whatever amounts that they were compensated. So it is a very transparent system that we have in place.
Oh, that's, okay, yeah, that's good. I was just trying to track the compensation or credits back to us.
Yeah.
Okay, thank you.
So FHN doesn't receive any other type of incentive to put us in one investment over another?
FHN does not receive any incentive or compensation beyond the fixed amounts that we are contracted to pay them on a quarterly basis.
Okay.
How long do we have the contract with them?
The contract is maturing at the end of January. So we will see if there are other institutions or companies and go through the request for information process to find the best company advisor that's out there and go from there.
Do we invite bids from us?
Yes.
It's been a really long time now that we're with FHN, since 2013 or 14. It would be really nice to have some formal proposals from other organizations, if for no other reason than to demonstrate to the general public that we're doing our due diligence and not relying upon word of mouth, tarot cards, or other types of information.
And have that information before January when the current contract expires.
The last time we did this, the contract had expired.
Do we know what our neighboring cities are using?
Every city has their own operation. So some cities, they conduct the trades independently. Some cities use a consultant. It just varies, so. Yeah, it's up to the individual cities to manage the portfolio as they see fit.
In Manhattan Beach, their treasurer manages their portfolio. It's not always the same situation whereby a third party is contracted in order to manage the investments.
Excuse me, before we go further, if you're gonna have any questions or speak on your mic, can you move your mic a little bit closer for some of you? Commissioner Jesty, I'm not able to hear some of your questions. And if I can't hear you, then the camera on TV, they can't hear you as well. So just get used to it. Thank you.
All right, a quick question. Is the performance net of fees or is it before fees?
The performance is independent of fees. Our fee is given independently of the performance, yeah.
I have a general question on the presentation, the hard copy as we received it. In some cases, the graphed information is based on colored lines, but what we received is all black and white. So in the future, it would be easier on us to either create the graphs in a way that it works in black and white or to provide it in color.
Yeah, we could try and provide in color. Otherwise, you could look on your computer screen and you might be able to see the colors better through the agenda that way, the item on the agenda through your computer.
Sure, but if we're going along with the presentation, and then we wouldn't be able to look at our computer screen because the presentation would be on our computer screen.
Sure.
Just as a recommendation, again, you don't have to print it in color. The graph could be done in such a way that the points are different.
Okay, yeah. Well, we can, if it's easier for you to see, we can put in color.
Okay, thank you.
And remind us how's the income from this portfolio distributed? Does each owner of an asset receive the income when those bonds pay interest?
So as the interest is accrued, the funds get deposited into our general fund, and then, is that what you're asking?
Yes, but you've got several owners of that general fund, right? If you've got 100 million of assets, there are several owners of that, or several funds that are owners of that. So is that money deposited into, doesn't all go into the general fund, right?
No, this is general fund money. So essentially, when the investment matures,
It's all general fund money?
yeah.
Okay, I was under the impression there were several other funds in the city complex that had money in this portfolio, not just the general fund.
You mean like, Chair, what do you mean, like the successor agency that sponsored the lease revenue bond, something like that?
Yeah, there could be any fund, any fund that has excess assets could invest in this portfolio, and I thought there were many more than just the general fund.
So-
We've got a figure that shows the general fund owns, I thought 50 or 60% of this, not 100%.
Yeah, page
So if you look at this chart, I don't know if, I don't know how to, it's page 77. So you're talking about the successor fund, public finance authority fund, workman's comp fund.
Right.
Yeah. So these are the balances in each of these different funds, and that is,
So I think to his question, when the interest payments come in, is it allocated pro rata to each individual fund as if they owned it equal, based on their
Yeah, so-
percentage share?
yeah, so the money that's invested is general fund money. If you're referring to like the Public Finance Authority Fund, there's money in the checking account as well as some money in the LAIF account. So that money stays in those specific funds. Yeah.
Okay.
Yeah.
And you budgeted that, did you budget that or give an estimate for that before the year? What I'm getting at is, I think rates have gone up faster than we thought they would go up. So if you estimated that at the beginning of the year.
Correct, yeah.
The actual
So, yeah.
is substantially higher
Yeah.
than estimated.
You're right. 750,000 was budgeted prior to the actions of, the recent actions that we've been
Yeah.
seeing. Yeah.
And you've got a little over $1 million of actual income, I think, the chart showed, so.
Correct,
Okay.
yeah.
Okay, just a curious question, thanks.
I see our average years to maturity is kind of on an up cycle. Is that by design, or is that just based on the investments we currently have in place?
Which one are you talking about?
Like on page 56, it varies from period to period, but we're currently on a bit of an up cycle, and I just wondered.
Oh, yeah,
What's
weighted
driving
average
that?
maturity, is that what you're referring to? Yeah,
Yes.
so based on our investment policy guidelines, we follow that. And as we see
Got it.
investments that we should consider, we look at the maturity of the investment and base our decision on whether or not to invest in that maturity. So, yeah, in a dropping rate environment, having a longer beneficial and a rising, it just, it's
So is it based on yields?
our decision to purchase an investment is based on safety,
Right.
liquidity, and yield. Yield is the last thing we base our decision on.
Okay. So again, we're currently at a part that I would say is above average based on this graph. So is there something that's driving that?
Depending on the redemptions and the purchases that we decide to make, the weighted average maturity varies based on that. So when we make a decision to purchase a security, one of the decisions that's in place, one of the factors that's in place is we want to have a laddered portfolio.
Right.
In order to have a laddered portfolio, the weighted average maturity is going to vary depending on how long of an investment we get into, the duration of the investment that we get into. So it averages right around 2.
Does it? Okay. Thank you.
Yeah.
You have rising interest rates. Does it make sense to have a shorter maturity?
In a rising interest rate environment, does it make sense to have a short maturity? That's could be one of the reasons, but we don't base our decisions on the rate of return. We base it on safety and liquidity based on our cash flow needs, and then finally yield. So yield is not our primary reason to invest in a particular investment.
So Nilesh, there's got to be a balance in that, because obviously for security, we should take all of our cash out of the bank and put it under the mattress. Who does the modeling within our allowed policy to give us a reasonable yield? Is that your department? Is that our advisors? How do you figure out what is the balance between putting all the cash under the mattress and investing it someplace?
So based on the guidelines that we have been approved to invest, we make the decision alongside our investment advisor. And based on that decision, we move forward with purchasing a particular investment.
What do you mean by alongside? Does somebody actually sit down and do a model and say, well, based on interest rates and availability and things, this is a more appropriate place than that, because we have nothing in our portfolio that approaches the percentage that's allowed by policy. And I'm just wondering if the mix is reasonable, balanced against the yield. I think that's where my question is, right? I mean, I'm not trying to be difficult, but, and it's certainly, it's certainly difficult for anybody to do. So I'm just wondering who does the modeling? When you say you do it alongside the advisors, do they do a model like on a quarterly basis and say, well, if you reallocated your funds like this, you would get a higher yield? Or do you do that? Or how do you figure out what to do?
Yeah, because there's allowed by policy, and then I guess the question is, what is your targeted
Right.
rate? Like, what is, in terms of duration, or from what, who you buy it from?
Right. So since this is a buy and hold portfolio, right, we're not making changes based on market trends, economic conditions. It's a buy and hold portfolio. So as these maturities are redeeming and we have funds that are available based on our cash flow needs, a decision is made whether to move forward or not move forward. That's the first thing, right? We can have it just sit in the bank like you mentioned. But if we make the decision to move forward, then we have to find the best, safest option that's available.
But who makes the decision and how do you make it? So for instance, I'm seeing this year that you're completely out of any corporate investments. Somebody decided that was a good idea, and I guess I'm wondering who thought that was a good idea. I'm not saying it's a bad idea, okay? I'm just wondering because it's very obvious that it happened this year.
I think what I remember when Rick Phillips was here from FHM and Steve, city treasurer, they talked about the idea that it was the city treasurer that makes a decision, the ultimate decision on what to buy or not buy upon recommendation from the investment house.
Okay.
But to your point, I think it'd be valuable to know what the process is. Do you and Nilesh and Steve and members of the finance team sit down once a year and map out a strategy? We've got these redemptions coming in the upcoming year. We've got 5 different redemptions. When those redemptions occur, we would like to perhaps pursue a strategy of XYZ in purchasing to meet the goals of liquidity, safety, and available resources, money available to time. Do you have an annual planning session to say, redemptions are happening. When these redemptions happen, this is what we'd like to look at for purchase, and then consult with our investment advisors and say, this is what we see happening within the next year. Is that kind of what you're getting to?
That's what I'm getting to. That's well said. And it's like, how do you scope this out?
We do have regular meetings with our advisor as well as finance. And so based on those decisions, based on those conversations, decisions are made. Whether we want to increase our liquidity, whether we want to increase our safety, whether we want to invest in something and not invest in something. So
Are they done contemporaneously with the redemption, or are they done at a planning session in advance, planning out the year?
both.
Okay.
And do you have targets for investment returns, annual targets?
We budget the interest earned. That's our target, is the interest that the budget that we created at the beginning of the fiscal year is our target. So I don't,
Okay.
yeah.
Okay.
Yeah, I think they budget current income or actual cash income and not return. Because the return this year, for instance, has been negative because rates have been going up.
Right.
But their current yield is in excess of what they budgeted, so.
Right. Okay. Thank you.
You're welcome.
Further questions?
Anything from the public?
Is this your presentation is finished? Is that right?
Yes, my presentation is finished. Thank you so much.
Okay, thanks. I suppose we should receive and file.
We should perhaps go to the public, Mr. Chair? Ask for public comment, sir?
Public comments.
Yeah, we have no public comment and we have no e-comments.
Okay.
We'll make a motion to receive and file the treasurer's report.
I second.
All in favor?
Aye.
Aye.
Do we need to do a roll call on a
Yeah,
item
I think for
discussion?
the discussion items, best if we just do a roll call for each item. Would you like me? Okay. Commissioner Conroy,
Aye.
Commissioner Jesse,
Aye.
Chair Woodham,
Aye.
Commissioner Marin,
Aye.
Commissioner Samples,
Aye.
Commissioner Solomon.
Aye.
Thank you.
Okay, good. Item J2. Discussion and possible action regarding the fiscal year 2022-2023 proposed budget and the 22-27 proposed 5-year capital improvement program. And I think Jennifer Paul, Finance Director, is,
Not Jennifer, but she is, I think, online. Doug, is she available via Zoom or?
Yeah, she is on Zoom.
Yeah, so Jennifer's participating remotely. She's allowed me to tell you this, but I think many of you know, I'm sure Chair Woodham knows, but Jennifer unfortunately has been battling COVID for the last 3 weeks, which, as you can imagine, presented some challenges for us getting the proposed budget out on the 16th. I'm glad we delivered it on time. There are some quality control, quality assurance processes in place that have been happening over the last week to make sure we capture any potential sort of roll-up errors in the final data. So we're still working on that, scrubbing the document, and we'll be presenting that as part of our normal budget response report number 1, sort of corrections and retractions. But so far, the few mistakes we've found have all actually been in the funds or the general fund's favor. So that's been good. But it has been an interesting couple of weeks, to say the least. So what I do want to do for you tonight is just, and I don't want to entirely mimic what I shared with the council at our first hearing on the 17th, but I want to give you somewhat of a similar introduction. Thankfully, the commission has 2 bites at the apple this year to talk about the budget. So my hope tonight was to kind of introduce it to a degree, answer any questions you have this evening, and if there are things in particular you'd like us to follow up on, drill into a little more detail on, and prepare for you, I would ask that you lay those out for us, and we come back to you as part of our discussion on the 9th and kind of continue to roll our sleeves up. So I'm glad we have 2 opportunities to discuss the budget with you this fiscal year. Just to give you some general overview, the budget includes my transmittal letter, the city manager's budget message. I've constructed that a little differently this year than in years past. I've tried to make it somewhat user-friendly to the extent I can, walk the community, the council, you all through kind of how we prepared the budget, and kind of walk through our core expenditures, our core revenues, and then why we're proposing, at least in summary, the decision packages that we are. We have 83 decision packages as part of this year's budget. Decision packages, as this group knows, are really our proposed budget modifications year over year to core. 83 is a little unusual. It's probably the biggest number I can recall in my 16-year history, but there's good reason for it. This budget this year really is a restorative budget. The council, this commission, the community really, I think, is ready to see additional service delivered. We are still operating in many departments short-staffed, as we have in prior years. We didn't necessarily restore all vacant positions or all positions that have been removed from the budget in years past, but we did restore them in areas where we have seen persistent requests for enhanced service delivery or need. And you'll see those reflected in some of the packages. So that's really in large part what's driving the 83 DPs, as we call them. But it's also fortuitous in that we have quite a bit of one-time general fund money to spend this fiscal year. It's rare that we go into a budget cycle with roughly $11 million to discuss. You all are familiar with why and how that was generated, largely through the residual savings from our pension debt refinancing through our bond process, which, as we've discussed, should save the city over $100 million, roughly, over a 25-year period. That bond issuance couldn't have candidly gone any better for the city of Redondo Beach. The timing was fantastic, for us to ultimately have an all-in financing rate of 2.8% versus what was our obligated cost structure under PERS at 7% is phenomenal. We just really, we got somewhat lucky, and, we were, I think all of us, and this commission was a big part of it, astute in pushing and for the timing that we did ultimately execute. So, again, I've said it to you before, thank you for your contribution to that process and effort. It's really been fabulous for the city. But that process, because ultimately PERS came back to us with a lower than anticipated supplemental payment last year, created significant savings for the general fund to spend in this proposed budget. So you'll see that in the decision packages. We lay out what the one-time requests are versus our core spending. You know, as I've said to this commission before and the council, we're always looking very carefully at what our ongoing revenues versus our ongoing expenditures look like. If you look at the proposed budget, you'll notice before decision packages, we have about a $600,000 shortfall from on structural revenue to structural expense. After the decision packages, because I do propose a little over 1.6 million in structural expenditure and spending, that number goes to about 2.3 million. The reason I feel comfortable in doing that this fiscal year is because we are still roughly 3.2 million short of what I would call predictable and dependable transient occupancy tax recovery coming next fiscal year. You've heard me talk a little bit about the authority-funded reserve, effectively the site-specific tax pledge that the city promised the Marine Avenue Hotel developer many years ago to allow them to obtain financing and build the 3 Marine Avenue Hotel properties, which in a given year would generate approximately $3 to $3.4 million of TOT for us, transient occupancy tax. That site-specific pledge, and I know many of you have heard this, is allowed to be accessed by the financiers under certain circumstances. Really, the circumstance that would be required for them to access it is effectively an occupancy rate of less than 35%. Well, pre-pandemic, that was unheard of. Unfortunately, the pandemic was the perfect storm for them to be able to access those funds. Now, thankfully, when that structure was initially created by the city, there was an $8.5 million reserve account set aside that accrues through on-site transient occupancy taxes. We thankfully, and this commission was aware of this and somewhat part of it, reduced that amount from 8.5 million to 3 million a few years back. And thank goodness we did, because under the circumstances, they would have flushed not just the 3 million, but the full 8.5 million during the pandemic. So as it stands, they are now repopulating that $3 million reserve, which was fully spent during the pandemic cycle. But it will take them at least a full year to get it topped off at 3 million before we'll start to see TOT accrue again to the general fund. So what you'll see in the message is we can reasonably predict that we will see an additional 3 million from that site beginning in fiscal year 23-24. So that is really the basis for us feeling comfortable to go ahead and spend structurally this fiscal year beyond current structural revenues. We are really looking at the structural deficit eroding over a 2-year cycle rather than a 1-year cycle. And in part, and even though you all know me, I'm fairly conservative when it comes to our spending. In part, we're really pushing that envelope a little bit because we know that the community and the council wants to see additional service delivered in particular areas. And we'll talk a little bit about those in the decision packages as we go through our Q&A here over the 2 meetings. So that's a big part of it. The budget was put together a little differently this year than in prior years. I personally visited but for one that missed due to lack of quorum, I think, and one that was out of cycle, just about every commission meeting to seek input from the commissions prior to the presentation of the budget rather than after. And I will say that there were a lot of great ideas, as there always are from our commissions, this commission included. And we added a section this year, you'll see it in our decision package language, that speaks to that. Decision packages have been recommended that were suggested by or supported by commissions that were not already part of our normal program in our other decision package areas. So you'll see that we've modified what we've used as our criterion in this year's proposed budget from years past. I'll go through that in a second. And then lastly, of course, we always prepare budget response reports for the council. The first tranche of those reports, which, I haven't counted them yet, but they're probably in the 40 to 50 range, questions that have come up over the last several months, will be delivered to the council as part of their June 7th agenda packet. You will all see those as part of your discussion at June 9th. So you'll have that material available to you. And a budget response report is really a request for additional information. It sometimes leads to changes or further modifications by the council to the proposed budget. Sometimes it's just informative for the community to know kind of a what-if scenario and doesn't go anywhere from a structural standpoint. But it is always helpful to kind of answer those nagging questions. How much does it cost to paint the fence from, this location to that, or restore a facility to, or add additional hours at a library or things of that nature. It can really run the gamut. And I think they've been helpful in certainly from a transparency standpoint, helping people understand the impacts of budget decisions. So those budget response reports, the big batch of them will fall as part of that packet that'll go out, I think, on June 2nd, roughly, if my math's correct. So here's the criteria. I won't read all this to you. It's very wordy, but just to point to a couple of changes. We always have does it sustain or improve revenue to the city? That's really important to us. Obviously, it's a fundamental question. We added the restoration language this year. Does it restore a department position that had been lost in prior years? That's been big for the council. We always have does it comply with mandates or unavoidable costs? Things like inflationary factors this year are driving many of these decision packages, whether it's the price of fuel or compressed natural gas or electricity. A variety of things are really forced spending in the proposed budget this year. We've got, of course, the natural, does it protect health and safety in the community? But what we added to that this year is quality of life. Quality of life initiatives have been very important to the council in particular, whether it's code enforcement, it's us looking at blighted properties, it's us looking at rules in parks that might inconvenience residents, noise, things of that nature. Not the really heavy kind of crime-related response, but the more nuanced sort of code enforcement that we haven't always done with so well. We felt it important to kind of add that function to our criterion as well. And then we've got the traditional improve organizational efficiency and effectiveness. And then this next one, priority objectives that were suggested by the commissions or members of the public during our input process. And then the last one, typically, does it fill a gap in service? In this case, it might be supplementing areas that otherwise we have struggled with, and we see suggestion from the community. So in summary, the budget, starts with roughly $11 million. We have core revenue, which is up this year from years past to a little over $101 million. We've got core expenditures at just under $102 million. I will say that figure is being slightly revised downward based on some follow-up quality control mapping that Jennifer and her staff are doing on the ISF allocations. It's actually, that core number is going down. So it's to the general fund's favor by about $51,000. That'll be part of our BRR number 1. And then we've got, as I mentioned, ongoing net decision packages at about $1.7 million. We have one-time decision packages at a little over $2.6 million. And then we have a very significant one-time single project CIP allocation from the general fund to the capital projects fund of $4.3 million roughly. And that is in direct response to concerns we've heard not only from this commission, but certainly the Harbor Commission. We need to reinvest in our pier parking structure. Its safety, integrity are really of utmost concern. We have an opportunity with the currently vacant Fun Factory space to actually add seismic strength to the parking structure, a rare opportunity through the addition of shear walls. So this money, while it is very painful to spend this kind of money, $4.3 million out of the general fund, which can be spent on anything, on the pier parking structure, we really feel it's an important investment in the space, and it's an essential facility that we just can't neglect. So it's frustrating to spend the money and have to spend the money, but we think it's ultimately valuable long-term in protecting not only the structure, but the waterfront as an asset in its entirety. Because as we all know, there really isn't a waterfront without significant and ample parking. So it's an opportunity, the vacancy there at the Fun Factory site and just the need for additional rehabilitation. We think it's worth the investment. And after all that, there's a little bit over $1.8 million available that we haven't proposed for spending. The council may have ideas for it. They certainly may want to tweak one or many of the 83 decision packages that we have suggested. I say, it's somewhat tongue in cheek, but it's actually true. The budget really, after it's proposed from us, it really does become the mayor and council's budget. It's really the single most important policy decision they make in any given year. You're all a part of, the advice and counsel that goes into that decision. We're giving you effectively our best professional recommendation on changes as we see the world today. It's a fluid environment, and certainly there are other competing priorities and a lot of good ways to spend this money. There really are. We have a lot of need. So we're giving you what we think to be the priorities in the city of Redondo Beach as they stand today, but certainly are not at all offended by any proposed changes or modifications to the budget that you all see fit or the mayor and council ultimately in their final decision would like to see executed. So we've given a little bit of wiggle room. Doesn't have to be spent. It certainly can be additional changes can occur through some of the other suggestions we've made. This gives you a little sense of our calendar. Council received and filed and really had their first budget hearing. That was a little different this year than in years past. Normally, that's a receive and file action. There's no ability for them to talk about the budget. We actually notice it as a public hearing, so we will have by the end of the calendar, we'll have held 4 public hearings on the budget with the council. So that can be part of the administrative record, which was a little bit of a change. Of course, tonight, May 26th, is your first review. And of course, you have a follow-up opportunity on June 9th, which I think, is where you're really going to want to, I think, provide your more formative input. June 7th will be another budget hearing with the council. It'll be a focus on sort of the operating functions, the decision packages themselves. The June 14th meeting will be a capital improvement program focus. We'll really talk capital with the council. It's not to say that they won't also discuss operations, but really our presentations will focus on the capital program. We have another meeting. The Harbor Commission will get a chance to look at the budget on the 13th, just before the council's CIP hearing. And at that hearing, the CIP hearing, there's going to be a presentation from our folks with Cosmon and Associates as it pertains to potential for borrowing. There's been a lot of questions about additional financing package going out and issuing debt for additional capital repair. We're going to talk a little bit about what the current cost of debt is. It's gone up a little bit in the last few months, just given what's happening across the globe. But it's still, when you talk, in fact, I had lunch today with the folks from Stiefel, who we check in with regularly. Current municipal bond market has got, would estimate about a 4.5% borrow for a community like ours with our current credit rating. So while it's more expensive than what we obtained during the pension refinancing, it's still, reasonable cost of funds. So it's something the council may want to consider. Every $10 million of borrowing in today's environment would run us about $600,000 of annual debt service. So that's really, why it's so important to have that discussion, I think, as part of the broader budget is that's really what you're deciding. Do we want to commit these sort of structural resources to a borrow? And, what else could we be doing with that funding? And then lastly, we'll also hear actually at the meeting of the 14th, we'll hear from Walker Engineering, our structural parking consultant who has done another assessment of the condition of the pier structure. We'll be receiving a presentation from them at the council meeting as well. Talks a little bit about why that additional reinvestment in the structure is so critical right now. And really, we commissioned them to do a follow-up assessment. They did an original one, I want to say in 2016, 17, somewhere in that area. After what happened in Florida, this last year, we asked them to come back out and take another look, update the assessment, and really look at not just the condition of the structure, but where we're at seismically. And they've done that. So we're looking forward to, presenting that data to the community on the 14th. And then we'll hopefully have our last hearing on June 21st, where the council will consider adopting the budget and, setting us up for fiscal year 22-23, which will begin July 1st. So, that's kind of where we're at. I'm happy to answer any and all questions you've got for us tonight. I am also happy to take copious notes and bring back the appropriate department heads after I know your sort of line of inquiry and make sure they're available to you on the 9th. If you've got particular folks you want to talk to directly, I've already prepped them for that. In fact, we had a department head meeting today where I said, you're off the hook tonight, but, I may be calling you to be a part of the presentation on June 9th, depending on the questions we get from the commission. So
Bring pizza.
yeah, yeah, exactly. anyway, that's effectively where we're at. Obviously the recommendation tonight is just have a general discussion and provide any input you like. But of course, as you think about framing your final letter and what you want to recommend to the council, you'll really be constructing that as part of, I think, your June 9th action. So that concludes the introductory presentation, and I'm here to answer any questions you might have. Jennifer is also available, through the speakers here to answer any questions you might have more specifically about the financial summaries and tables in the broader book. My focus, of course, was the manager's message, and then ultimately what we were recommending to you as it pertains to decision packages. So, it's been a bit of a experience. Jennifer was working remotely for the final 2 weeks of our budget delivery, so we didn't have the benefit of her being able to check and balance as much of her work with her staff, physically present as she would have liked. So we're able to do that now, thankfully, and we are scrubbing the budget to find any final tweaks that are necessary and get that to the council, by June 7th. But we are happy that we are where we are, and we'll refine it and go from there. So appreciate all your advice and input on this. And like I said, I'm here with any questions.
I think there are some commissioners who have questions on the decision packages, and if so, we'd certainly
Sure.
look forward to going over those.
I have, I'll limit, I went through all the decision packages, but respect to everybody's time, will maybe just hit a few highlights, and it might resonate some of the things as I'm talking about them, or we're talking about them as a group. That may spur some other questions, so please interrupt me.
And just as an addition to that, I assume then that the June 9th meeting for Budget and Finance would be the time when we'd go in detail over those decision packages for all of us. I have not had a chance to look at them yet, so let's have whatever discussion we can tonight, and then we'll carry that over to June 9th.
Point of information, if anyone hasn't seen it already, but the decision packages are listed in their totality beginning on page 4.
Yeah, just as a summary of 1 through 83. Yeah.
Yes.
Summary of recommendations.
Yes.
Yeah, we have a table in the document this year that really breaks it down so you can see the one-time versus the ongoing. And of course, the city manager's message has the narrative, the paragraphs that go with each of the proposed decision packages, as you know the format. So yeah, fire away, happy to provide whatever context I can. And like I said, I'll bring back the subject matter experts, depending on what you're curious about on the 9th.
For DP3, Mike,
Yep.
Which is a decision package talking about the outdoor dining deck fees.
Yep.
Does that space include, let's say, in the harbor, where we're not taking out parking, but that upper deck above Naja's and the Slip Bar and across from Turtle Park?
The revenue estimate in there does not include the Harbor Uplands area or the Tidelands. We view this as more addressing what's occurring down in Riviera Village, and that's the $400,000. And I'll be candid, that's an aggressive estimate. That would mean that all of the businesses that have suggested interest in remaining after we make the transition from our sort of transitory structure to a more permanent remain. I suspect if the council ultimately adopts the $2, we'll see some attrition. But this reflects the state of the world down there today. It does not incorporate the area above International Boardwalk as an example. However, you could make a case that we ought to extend the fee to those locations as well. So we're certainly open to that conversation and think there could be merit to that.
And they may or may not, it's opt in or opt out.
They could opt out at that
of
point. Correct.
Depending upon it is. I'm sorry.
Whether or not we charge that fee for the people on, or the restaurants along the International Boardwalk, then would they be able to continue using that space above or not?
Yeah, the thinking with the fee, at some point we have to monetize the use of that space, right? We just have to. I mean, we've given it away during the pandemic for free because we were trying to be helpful to the business community. Yeah. In some instances, that outdoor space, and not specific to the boardwalk, but in some instances, our restaurants, particularly in the village, they've got more outdoor space than they have indoor space, even when they're back to 100% capacity. So, we think it's really, we went with the $2 fee. It's not all that aggressive in the marketplace. It's on the higher side, but it's not on the extreme edge. but we're in a sense sending a little bit of a message, saying, hey, look, this is important that we begin to, for the sake of the public, claw back some of this use of space. The boardwalk, if we were to extend the fee to those locations, they would have to make a conscious choice. Would they skinny down their use? Would they vacate their use? But if we did implement the fee at that site, it would ultimately put them to that decision.
Hopefully we can continue to do it. I think it's a great use of the space. Prior to the pandemic, I think that space, that area up above, for the most part, went mostly unused. Some people would walk through there, but now I think it's a great thing.
It is, and it should be viewed, and the reason we didn't incorporate it in the original proposals, it should be viewed as a little bit differently because given our lease arrangements with those businesses, we actually do receive a percentage of gross sales. So unlike just general sales tax collection, we receive through the rent structure, some value in them expanding and growing their gross. So,
Which we don't get in the village.
Right. So it is a little bit of an apples to oranges economic discussion, I think. But whether or not we assign a fee down there is something we certainly could debate. And it also could just be simply left to the individual lease structures, and we could work it out through there. But it's a conversation worth having.
For the build-outs that we have down there, is the fee contemplative of any tenant improvements or other infrastructure needs that we're providing?
It's funny, we thought of, you could credit for those investments. At this point, it's just a raw fee. You use the space and occupy it for restaurant purposes, you pay the city $2 a square foot, irregardless of what they're obligated to do to permanentize the space.
And of course, if the Coastal Commission comes in and says, nope, we want those parking spaces back, then they have to agree that they're going to pick up stakes and move back into ours.
Yep, correct.
Okay. I'm going to continue then unless there's a different question on that one. Like I said, I don't want to dig in too hard on them. On number 6, that's going to be kind of a controversial one, to be certain, with the restoration of the ladder truck position. I try to avoid all of the politics of the fire department discussion. It's part of it is rolled into it, but the question I have is, by restoring this position, would we be better served to do an overhire program? Something like that, and maybe only have to restore 2 positions rather than 3 shifts?
Yep, it's an interesting question, and we thought about all of those options. As we see it, we wouldn't necessarily reinstate the minimum staffing requirement that comes with these 3 positions.
Not reopen the MOU.
Right, not reopen the MOU, because under the MOU right now, we don't have the obligation to actually staff it to 19.
Right.
But it gives us the ability to be flexible in how we assign the use of that space. And it would still give us flexibility, theoretically, to staffing the ladder truck with 4 during potential peak use, and then assigning that 4th individual to some other purpose, perhaps if we adjust our tier dispatch model to focus on BLS response or the like. It gives us some flexibility. The constant staffing obligation in the MOU is really what drives not only that 400,000 plus, minimum requirement, but if someone goes off sick, of course, we've got to backfill it through OT and that number goes up. This wouldn't necessarily do that. This would just pay for 3 individuals to be back in the budget, and we would then be able to flexibly use their service.
So you're saying that whether or not, it doesn't necessarily, if we did go say and describe it as an overhire rather than a restoration, in finger quotes, of that position, would we be able then to manage that as a 2-person and maybe mitigate the 455?
We could. We absolutely could. We would have somebody staff it at shifts where we would predict more need. It's in a sense, we still have A, B, and C shift, right? So they would have to flow through one of those models. But yeah, theoretically, we could just do 2. Yeah.
Because when we heard from Chief Kaufman for the Castro Kaufman analysis of our fire department, 70% of our calls were medical calls.
Yep.
So it probably better not to specifically staff for the ladder truck, but rather an overhire and overall staffing for the department so that we have some flexibility in there for paramedic response or other responses for trained personnel across disciplines.
Yep. And the one nice, and absolutely, those are all great points. The other thing to consider too is hiring at this firefighter rank rather than the firefighter paramedic rank allows us to bring folks into the organization and then develop them as paramedics. And it does open our ability to kind of create that bench of staff that ultimately accrue through other areas of the fire service. So it's a lower barrier. It allows us to kind of pursue a wider, more diverse potential firefighter workforce.
So then I think for our January 9th meeting, it might be worthwhile then to have an idea, consider it a variation of a budget response report.
Yeah.
For what, let's say, 2 positions might be instead of 3 positions.
Right.
That would be an overhire rather than a restaffing, and maybe give us additional resources across the department and maybe mitigate the cost and still increase our staffing and resources.
Yep, I think it's a great question. And in fact, I'll make sure Keith or somebody from the fire service is here to even help flush that out further.
How many ladder trucks do we have?
Just one.
Just one. So going from 3 back to 4 personnel. So we're talking about 1 additional hire?
Well, we're talking about, in order to staff that, theoretically, if you
'cause you
set
have
constant
the same
staffing,
person there
yeah,
constantly.
exactly. You, the same person doesn't work constantly. You need 3 people to work that one shift.
Position.
Yeah.
I got you.
4.5.
Yeah, realistically, when you look at sick leave, other forms of leave, and true utilization, it's more than just the 3 because you end up backfilling. That's why that not having that constant staffing requirement would limit the cost to a degree to just the 3 bodies.
So this cost of $455,000, that represents 4.5.
Well, no, it doesn't. It represents just 3 positions that would staff when they're available, and in their absence, we wouldn't fill the void, so to speak.
Okay.
So there would be times when the ladder truck wouldn't have the full 4th member complement based on vacancy
Thank you.
So
or absence.
really for the fire department, we love to call it overhire, but it's not really overhire when you have a couple of folks that are sort of like not assigned and not absolutely committed to a spot, but they're on duty because invariably you have people that are off duty, whether it's injury, vacation, sick time, whatever it is, and you've got to still fill that seat in order to put out a fire.
Right, and if you have constant staffing obligations in your MOU, it makes it even tougher.
Yeah.
So then you're forcing people in to cover those shifts. You know, as an example, we don't have constant staffing in the police department, right?
Right.
So if we have an absence, we do for patrol, but that's the only location. But if you have an absence, you just lose the service for the day. You don't have to actually then order somebody in to backfill it on an overtime basis. Right.
And reasonably, by formatting it a little different way, I mean, if it came through and the council's decision was, well, we want to just do it for the ladder truck and it's really 4.5 people and you have to reopen the MOU, then the unintended consequence of that is, well, you have inflationary pressures right now. The union is going to ask for a bigger increase than where we are right now. And there's going to be, you create a discord, you create staff time for negotiating the MOU, you create possibly an additional cost associated that you don't have right now through the end of the contract. So if there's a way, I mean, it's a little bit selfish for this on the city's part. Selfish may be the wrong word for it, but more prudent.
Just more cost,
More cost effective. I don't hate to talk about people that way, but more cost effective to do it.
Yeah. Well, the good news here is we're adding surface, right? We're not taking it away or
Right.
adjusting it. We're really bringing something back that we currently don't have.
Right.
So it's all a positive. It's all a plus to response, but it's not us saying we're going to recommit to constantly staffing that position. We're going to create some flexibility in how we manage it.
Which is why I suggest it's not.
No, it's a great question. And trust, we contemplated that too. We thought, well, do we only just do 2? Well, the council has understood the 3-person model, so we felt like that was the place to go. Not quite to constant staffing, but to bringing back 3 and at least attempting to restore the full position, knowing that in practice it wouldn't be 100% occupied.
Okay. So mostly a good news item.
Yeah. With fire department, it's a multi-dimensional game because you need a certain number of firefighters at an incident, a fire incident, or a traffic accident in order to do a particular job. So whether they all show up on that one vehicle or they show up in multiple vehicles, it's a matter of what kind of manpower do you need at that incident and how do you get them there, which is one side of it. And in the case of a ladder truck, it's typically you have 4 people there because it takes 1 to drive the truck, 1 to command what's going on, and a couple of them to get the ladder up and put water.
And Chief Kaufman has talked
Right.
about
So-
a change in style
So
for
how
how we
you-
how we dispatch.
How you go about getting those 4 people there is difficult, and having that flexibility on the truck, I think, is a good idea, so.
That's our hope. We know it's expensive. It's obviously the biggest operating and ongoing ask in the budget, but we felt like, given all that we've discussed, that it sort of bridges a little bit of that gap. Talks about us, it leans towards creating more flexibility longer term, allows us to sample the model. Our hope at some point would be, rather than roll the 4-person ladder truck, we would roll a 2-person unit as needed based on the event. Right. It's, one of the frustrations that's come up in the assessment, and this commission heard it, is, the community, when they fall and stub their toe, or, they got to trip and fall and they can't get up, they feel a little embarrassed that the ladder truck shows up at their front door and the division commander unit and everything else. And the reason is, it's because that's the only way we can respond. We have to go as a unit because that's how we're designed. But if we break that design down and say, no, it's going to be okay, we can treat it more flexibly and event-based, triage the call. We don't have to roll a ladder truck at that point. We can roll a small paramedic truck or a different unit. That's the goal here.
So I have to ask the question. We heard the presentation talking about appropriate response plans and what we've been doing out of tradition. When are we going to change the tradition and start doing what the rest of the world is doing?
Well, funny enough, you would be surprised. The rest of the world isn't as nimble as we would hope them to be. We may be fairly cutting edge if we do change it, but we are. Where we can administratively make changes that are identified in the assessment, we are making them. This one, this is a different, staffing the ladder truck and rolling with a smaller unit starts at the dispatch level, where we have to feel confident that we can identify the call, make the correct call, and then we are ready to roll accordingly. And we're just not yet there, but we are working on that.
Well, outboarding the ladder truck staffing, just in terms of apparatus response to an incident. We still have medical incidents every day where we roll multiple pieces of apparatus.
Yep.
And most of the country doesn't do that. If it's a medical response, you get 2 guys in a little red truck. Okay?
Or some places you might just get an EMT unit and there's no fire personnel that roll.
And you get no engine company, and often you get no police. We typically do police, engine company, and paramedics. When are we going to get to
Sounds
that
like Chief
next
Kaufman's
level?
going to be here.
We're
on
working
June
on
the
it.
9th.
We're working on it.
Okay.
I can tell you we are
Okay.
desperately working on it. And it really will start with our dispatchers identifying the nature of the call and then us being flexible enough to respond accordingly. We're still in that traditional LA County model where we are responding with the full engine company or the full ladder truck, depending on if the call's coming from station 1. We're just not quite there yet. I hope we'll get there soon, and we are working on that. And I can tell you, we can certainly pick this conversation up on the 9th.
Okay. So if you don't mind, I'd like to skip over to, since we're talking about fire department, decision package 22, talking about $100,000 in additional funds for supplies. First of all, in the entire decision package, what I would still love to see, I've been asking for this for years, is a little table at the bottom of every one of these DPs that says, this is what it cost us 3 years ago, this is what it
kind of the
cost us last year,
inflationary trend.
and this is how much it's costing us this year, and this is what it's going to be going forward.
Sure.
Because it's really hard to put this in perspective. An extra $100,000 in supplies sounds like a significant amount. I'm not going to try to nibble away at that, but right now, we are a non-transport agency. Does that affect this number?
No. What we are prepared to do through advanced life support and the costs, and now what is part of the traditional and contemporary medical protocol, we're expanding the level of drugs, the type of drugs that we have ready to administer at any call. The cost of those drugs are going up. That's as simply as I can respond to it. I agree with you. The $100,000 feels like a big number. It is a big number. It's in part also, you might recall, the last many years, we've thrown one-time funds at this issue. You know, we'll have a $50,000 or a $75,000 or a one-time $100,000. This is the year where we've stopped and said, okay, where's the trend line? What do we need to actually core correct this cost and call a spade? And we're proposing it at the $100,000 level. I think your question about the inflationary factor is a good one. Happy to prep Keith and have him ready to answer that on the 9th.
Well, I think my more important question is, my understanding is that transport agencies, even if they're transporting indigents, they get reimbursement from county aid plan funds.
They get it through insurance or however that
And
works.
we don't get that as a non-transport agency.
You are correct.
So insurance agencies pay for transportation. The county pays for transportation of indigents. As a non-transport agency, we have to absorb all those costs.
We absorb the cost to respond. The contract operator, McCormick, who does our transport work, that contract is controlled through the county. You might recall, it was about 7 years ago, we actually competed to get our transport rights back. Sometime, I don't know what year it was, 80s, 70s or 80s, there was a time when cities, department agencies had to either opt in or opt out. I don't know exactly what flow it was to maintaining transport. For whatever reason, at that juncture, our city, which I'm frustrated by, our city chose not to retain its transport rights. That has cost us big money. The revenue stream associated with transportation right now is big, and those agencies who do their own transport receive millions of dollars a year in transport revenue. We don't have it. It's exceedingly frustrating. I wish we could. We will compete again, if assuming we have our own department here in 3-4 years, we'll compete again. That ironically, the gatekeeper of that decision is LA County. So it's not really in their interest to see us restore that revenue stream.
Okay, thank you.
In that same decision package, it mentions volume of emergency responses, specifically cardiac arrest, as well as the rising costs of supplies and medications. So do we have a breakdown of those?
Oh, we could certainly, we have stats to talk about our increase in medical calls over the years. We could certainly provide that data for you. So yes, it's both.
Is that representative of an aging populace or what?
I think it's, could be a little bit of that. I think it's also representative of, medical care is expensive. It's cheaper.
Talk about the volume of the emergency responses.
So medical care is expensive, so it's sometimes cheaper, and you can jump to the front of the line in an emergency by calling 911 instead of driving yourself down to an emergency room.
I don't know what health insurance you have, but 911 is probably the most expensive way to get.
But here's the thing: if you don't have health insurance,
okay,
you still provided the service. So it's used. Our paramedic unit is somewhat of a country doctor, if you will. For those who aren't otherwise covered and don't have access to other care. So I think there are a number of reasons to drive it. I probably only have a fraction of them, but again, I think it's a good question.
Can you ask the chief or the staff to provide the number of calls out to Kensington?
Yeah, we could do that, I'm sure. Yep.
Okay. For item 10, it kind of ties into the fire department also. I'm happy to see some, that programming that Chief Kaufman asked for to help our non-sworn personnel do non-sworn work and have our sworn personnel doing their work. This commission was told in June of 2018 at a budget meeting that no sworn personnel were doing administrative duties. And we come to find out that was not accurate, put a lot of overtime on the books and put a lot of stress on our firefighters. And I'm really glad to see that programming get put in there. And I'm hoping that the council adopts number 10. For item number 17, restoration of the fire department budget. This is equipment that I thought that we had previously. Would a regional approach, if we end up going that way, we don't know what's going to happen, but if we went to a regional approach rather than a county approach or standalone on our own, would it help mitigate some of these costs? Because we would have, it wouldn't be a $70,000 ongoing with the regional approach because we would have a more centralized communication system there?
Let me make sure I'm just responding to the right one.
Actually, I think what would help would be if we had a better detailed breakdown of what this is talking about, because radio communications is something that within the last, I believe it's 20 months, all of the radio equipment in the city was replaced.
Right.
So radios shouldn't be part of this number.
Yeah, I think that may be a generic statement. What I'm referring to is this initial sentence. It's talking really about all the types of equipment they use. This is really just bringing back their normal M&O equipment budget. We could certainly provide more detail on how it's used, but it's really the department's general account for replacing whatever it might be,
My thought
access
was-
hoses, et cetera.
My thought was what Commissioner Sample said. It wasn't that long ago that we had replaced the radios.
Yeah, I'm guessing radio, I'm not sure, normally radios would fall under our,
An ISF.
yeah, an ISF, depending on the nature of the radio, although this is the end user stuff, so we'll try to get you an answer on that.
Just a little clarity.
Yeah.
Thank
So
you.
while we're talking about radios, I believe the city has now migrated completely to the INSB. And I'd really like to know, are we still maintaining our own individual radio system? And if so, why and how much?
System. And I do think we are, if we're not all the way there, we're close to INSB. In fact, we have a decision package on our costs associated with our cost share of that partnership. Radio system, costs.
On decision package, I'm sorry, I'll wait for you, Mike.
Yeah.
On decision package 23, the scuba apparatus, this is coming out of general fund. Is there a way that this could come out of Harbor Enterprise in some way or an ISF fund rather than general fund?
Oh, it's
equipment that's going to be used in the harbor.
SCBA is a acronym for self-contained breathing apparatus. This is not an underwater thing.
Okay, so it's
This is those
for all breathing
canisters.
apparatus across disciplines. Okay,
This is a landside issue.
For the firemen going
Gotcha.
in where there's smoke.
okay,
Yeah.
gotcha.
And they have a specific lifespan. We're nearing the end. It's a major number. This is only half the cost, as you can see in the package. We'll need to fund the other half next year, but it is a mandate to have equipment of a certain life.
And they need it.
They do. It's very
For
important.
decision package 32, solid waste collection, service rate adjustment, is this something that's just part of a regular increase built into the Athens contract?
Yep, this is our flow through. So all we're doing here is adjusting both the revenue and expenses because we just pass these. We collect the revenues on Athens' behalf and then we send it through the contract expense.
Gotcha, okay. Yeah, I saw that some of the other local cities were renegotiating their Athens contract at a 50% increase that was going to be phased in over 3 to 5 years.
I mean, sometimes you just get lucky with timing, but we have hit multiple home runs with that contract over the years. Our timing has been great. We have exceedingly low solid waste rates. And because when we initially negotiated the contract, we anticipated some of the legislative mandates that were coming, Athens built that into their program. So we have not experienced those special adjustments that have been needed in other communities to make changes to meet and comply with current law. So this would be just the annual adjustment. It's part of a multi-year contract that we negotiated a couple years ago.
Yeah, that's great. Okay, thank you. For DP 46, which is the Municipal Services Officer position, the parking
MSO.
enforcement, can you please let us know what our parking meter revenues are? And then just to get an idea how you're projecting this will be cost neutral with fewer meters in the city?
It's not meters, it's citations. that
Citations
are going
across
to be the source
for
of the revenue.
residential, it's residential, not meters.
Yeah, it's not meters, it's sites.
Perfect, okay, thank you.
Which I know is kind of funky to say. It's position sort of pays for itself, but in practice it will, based on their activity.
Meter.
We did. Okay.
But I guess to that question, like number 30 talks about upgrading parking meters from 3G to 4G.
That's a
That's a
cost.
pretty good size number, 140. Like, is that something that we would face? Like, what's the interplay with the outdoor eating versus upgrading those meters?
The meters are, so these electronic meters have really a connectivity requirement, right? And they're wireless point to point, through cellular network. Our problem is with Verizon's move to 5G, they're going to stop servicing the 3G level. So we have to update the meter heads to speak the new language, so to speak, with Verizon in order to actually have the connectivity for credit card use. So it's the Riviera Village dining, it's closed off a couple of meters, but theoretically, if those were ever reactivated, they would also need the upgrade.
But that's what I didn't know, like, do you wait on, like, the ones that are in a parking lot, you do, but the ones that are gonna
Yeah,
have dining there, maybe you
This
you wait
money,
to
I
another
think, covers
fiscal
just
year.
active meters. I
Gotcha,
think we would
okay.
have to come back later and reinstate, re-update those. Eventually, we're going to go away from the IPS meters that you have down there. We like this new can that you've seen, on Harbor Drive and Catalina. It's dark. It's kind of a black sleeve.
Yeah, single, yeah.
Yeah, those are far more effective long-term, I think, for us than what we've got down in the village, but we do need to service these for a little bit longer.
Funding makes sense.
Yeah.
What is the $2 per square foot proposed charge for that space compared to what the expected revenue would be on the parking meters? And/or
Yeah.
citations for the same area?
We're silent on that issue too. Typically what we would do is we would, in addition to the fee for use, the license fee for use, we would collect lost revenue. So we think of the $2 as a bit of I don't want to call it a negotiating chip. If the $2 is assigned, it's implemented, then that's the fee, that's the rate. What still has to be discussed is, would we ask the restaurateurs to reimburse us for prospective lost revenue? We didn't go there yet because it's just another component that has to be discussed and phasing this in. It wouldn't be specific to the budget. It would be more of a license by license discussion, and it would be based on whether or not they're occupying a space or not. Some are and some aren't. But we do need to, I think, have that conversation with them at some point.
It seems like the $2 per square foot would be in place to offset the lost revenue, not in addition to it, in my mind, unless the city ends up essentially subsidizing it by the lost parking income plus citation income.
Yeah, I think, it's a fair point. I mean, you could look at this as saying it's a cost recovery model. The reality here is I think we would argue, and the reason for the fee is that we're actually saying, you're in a way licensing public space for private use. And so the public should be compensated for that. Then you could ask yourself, well, is that compensation enough given the circumstances, even if it includes lost revenue opportunity from parking? One could argue, and some cities are doing this, some have a lower fee and then have a parking charge on top of it. Some have a lower fee, have a sewer charge, a hydrology charge, and a parking charge. There's different ways to attack this. The $2 is kind of just a generic, hey, it's going to be $2 a square foot. We're not going to think about parking, but it is certainly a discussion. It's a negotiating point. Absolutely.
Because you can't outprice it either. Otherwise, no merchants will.
Yep. Right. You have to be somewhat careful. $2 aggressive. They're not going to love that number, I'm sure.
Are we going to create a separate lease agreement with each of the participants?
We don't want to. We'd like to have a standardized license that has consistent requirements across the board. And then the only thing that would be calculated in that license is their square footage. Ideally. The other opportunity would be to create the structure that we have today, license the space through the Riviera Village Association and have them collect the fees on our behalf. That's clunky.
Enforcement would be pretty tough there.
It's difficult to enforce. So I think we'll be out there at some point with a measuring stick and saying, here's your share, here's your share. And as I said, I really do believe we'll get some attrition when we get there.
We sent Andy Wingy around for collections.
Pictures of space. Yeah. There are some details to be worked out there, and there's no question.
Okay.
Yeah.
So getting back to decision package 30, this talks about upgrading meters from 3G to 4G.
Yeah.
I'm sure that somebody's had a significant discussion of the life expectancy of 4G and why it's more reasonable to upgrade these only to 4G rather than going all the way to 5.
Yeah, I'm not sure that meter heads even have equipment and software parts for 5G connectivity. I'm not sure they're even at that level yet. There was a discussion about whether or not 4G was sufficient and should we be investing in that tech given the life expectancy of these heads. And I do believe the analysis confirmed that both of them are expiring at about the same time. Meaning we're going to have to replace the heads at the point where 5G becomes the minimum standard.
And our credit card contractor doesn't share in any cost of that?
Of the upgrade, no. No, it's our equipment. Yeah. So, yeah, the more we electrify,
It's a different kind of maintenance.
it's a different kind of maintenance.
For decision package 48, the health clinician,
Yeah. Yep.
we currently contract with the Department of Mental Health for these services. How much is that contract?
Oh, I don't have that offhand. I'll try to get that for you. But it's a shared contract, and the challenge we're facing is we're just not receiving the service in general, that they have not been as responsive as we would like.
Yeah, that's a fair point. The purpose of the pallet shelter was to be able to help the city comply with the Boise Supreme Court decision and to enforce a no camping ordinance, not to be on the cover of Pallet Shelter Quarterly. So
Is there such a publication?
I don't know, but it seems like we're trying to create one. And $126,000 can buy us another public works employee that is going out and performing services on behalf of the residents, improving their everyday life and the things that impact them the most, which is streets and roads and infrastructure. So if we're sharing the cost now and we take a little bit of a hit on a level of service, but we're sacrificing a level of service across the city for all residents who are paying into their coffers every year, it seems like we would choose the residents' service requirements and needs over the needs of the pallet shelter housing. Not that the houseless and the programming is unimportant, but that currently it's meeting a minimum threshold, and that should be fine. We eliminated a public works employee, I think it was, or we tried to reinstate a public works employee in our last budget, and we weren't able to do it. Last year, we gave raises to members of the city attorney's staff in order to help with the pallet shelter program. We bought a car. We got a new car, or we leased a car for the pallet shelter program. We hired another person to help us with the pallet shelter programming. It's government spending is choices. This is all about choices. And the choices that we're making, although noble, I would think that would be better served to the community as a whole to spend that money for public works, for a police officer, for a firefighter, or something like that, where we're getting a level of service now that we're sharing the cost on. They had it's mission creep, and it's not sound policy making.
Yeah, the one thing I would add, and certainly this is a policy decision the council's going to have to ultimately make. This person isn't just assigned to the pallet shelter. This health clinician would ultimately be part of our full homeless outreach and would assist in any of that contact, and may ultimately allow us to be better in that response, more targeted in that response, and address those individuals' needs and avoid pallet shelter utilization, or soon to be, our permanent supportive housing project, Project Home Key, that's going to be going in the south part of town. So it's part of general outreach. But yes, of course, it's a policy decision. We're contracting the service. We're not getting a lot of value out of that contract. We did formally contract Lila services as well. Bringing Lila on board has been exceedingly helpful. Our effectiveness in addressing needs has gone up massively.
No doubt she's done a great job.
Yeah, and there's some hope that the mental health clinician could assist with the homelessness situation and other potential calls that the police department roll on in a more targeted way. So there's value. The only reason I mention is it's not specific to the pallet shelter effort. It's meant to be supportive of all of our homeless outreach efforts. And I would argue that the community and public works, for that matter, do benefit as we move more and more of these individuals off the streets and into better situations.
If we got our own mental health clinician, would we end our contract with the Department of Mental Health?
We would.
We would.
We would.
So
And
that's
that's grant funded right
savings
now.
from that reflected in this number?
They would, but the challenge is that's a grant-funded contract now, and I'm not sure that grant flows through to our own staff member, but it's a great question. It's one that I've already noted. what happens with the cost of the contract post-hire.
Okay.
Mike, sidebar question, at least on homeless. Do you have someone within city administration who will or is putting together an ongoing annual cost for all that we're doing for homeless? I see this as being a potentially endless and bottomless pit for expenditure. And if we don't track it, it becomes easier to happen. We need to know whatever cost from any department is going to homeless, just because we need to know. We may not be able to avoid it, but if we don't constantly check it and update it, we're not going to know what the cost is.
I couldn't agree more, and it has been a moving target over the years. I mean, there's no question, but it is something we've talked about internally as well, as tracking that in a holistic way. It's difficult. It's spread out over many departments, as you referenced, but it is something that we are collecting and trying to keep tab on. And I'll see what I can present to you potentially on the 9th.
Just to try and, for transparency's sake, get all the numbers worked out.
It's a
That's
lot.
great. Thank
I mean,
you.
you know, it's a lot. I think you all know that. I mean, you might recall the decision package from a year ago, and when the council committed to a 4-year program, and you know, it's hundreds of thousands of dollars of general fund spending. But you know, you could argue, you go back a couple years, it was our single biggest concern in the community from a quality of life standpoint, and the program has made a demonstrable difference. I mean, what you see visually in our public right-of-ways today versus what we experienced 3-4 years ago is noticeably different.
Well, and then that's the argument for the council to have and to decide upon. I just think it's worthwhile to bring that discussion to the fore, and to Chair Woodham's point, at which point we don't know.
Right. What's our return on investment?
Yeah.
Right.
Yeah. So quality of life is the number one issue in the city for everybody, for residents. You know, I saw the presentation where Redondo was mentioned on NCIS for the pallet shelter. I'd personally rather be known as Surf City.
Yeah.
But there is an advantage to being out there that we're attending to the cause of homelessness within the region, that we're addressing the issue. It's very worthwhile, that it's working. But should we be taking upon that burden all on ourselves and continuing to shift the burden from regional funding to Redondo Beach funding?
Yeah, and it's absolutely a fair question. And if we are to do it, you would certainly hope that it presents value to the community when we do. As Lila's transition absolutely has. I can attest to that very confidently. That has been money very well spent. In fact, there's a decision package in here to add overtime budget so she can respond accordingly during off-hour events, and where there's a lot of need, candidly. So yes, it's a heavy lift. It's an investment. I do think, you know, you all do this. You commute to other areas of LA County, and you see what their parks, what their public right-of-ways look like versus ours. I'd much rather be here.
I go see clients downtown.
Yeah.
We've done a good job, but I think it's time to stop talking about the fact that we should capture what the cost is and recognize what the cost is, so that we can assign a value to it. And anybody else that asks us, we can tell them, well, if you really want to do this right, this is what it's going to cost you.
Absolutely.
And I think we have that obligation to other cities too.
I think we do. I couldn't agree more. I think what's made it a little bit challenging is, and it's not a bad problem to have, is each year we're a little uncertain as to how much in the way of grant funding will we receive year over year. And those grant decisions aren't always aligning with our fiscal year choices. You know, they come in the fall, they come at the winter, and we're, oh, hey, we picked up another $600,000 grant from the Board of Supervisors to offset most of our costs. Well, we didn't anticipate that, but we got it. Sometimes it's, we didn't get that $300,000 grant that we anticipated, so we're now coming out of pocket. So it's shifted, and we'll give you our best calculation as we see it today. But we've got state money potentially in the hopper. There's some talk about the homeless court program being funded more sustainably through state. So it's a, you know, we're always out there fighting for revenues. It's just sometimes hard for us to tell you definitively, oh yeah, we're going to definitely get $800,000 of grant funding this year, so it's only going to cost the general fund $500,000. It's, you know, well, we're hopeful, you know, that the grant funds are going to be there.
We have the county supervisor's attention.
We do, and we have the county's attention. We have become, in many ways, the model program. Both homeless court, pallet shelter, and
So thank us. With a big check.
Yeah, exactly. And we think we'll get another one from Supervisor Mitchell's office. We think we're going to get some from them. We're really always trying. I can't tell you that enough.
I'm sorry, go ahead, Commissioner Conroy.
Well, I was just going to say to your point, Commissioner Solomon, so we have the Palo shelter in place. That's one of the things that's supposed to enable us to enforce the anti-camping statute. I agree with you. Redondo Beach is in much better shape with our public spaces and parks than a lot of parts of LA County. But more specifically at Dominguez Park, one of the CIP projects is putting in new playground equipment there. I can tell you because I live in that district, I'm close by, that parking lot has RV dwellers that have the same RVs that have been there for a long, long time. And then the diagonal parking spaces all along in front of the park have people living in cars that have been the same cars. You know them because they put up things in the windows. So how is that? If we're...
We are aware. We have made outreach to just about every one of those. I can promise you that. It's a little, that one's a touch challenging addressing. If folks refuse service, we can only take that so far. We have instituted our RV parking ban in certain areas, the oversized vehicle issue. We do enforce that where we can. You might have noticed that Francisca Avenue used to be a location for a number of RVs. By adding meters and space, formalizing spaces there, we've actually moved, that problem to some degree. It shifts, it can tend to shift. Dominguez has been a location for some of that activity. But I wish I could give you a definitive answer. I think it's complicated. It's really case by case. Each of those individuals, if they move their vehicle and we talk to them and we make outreach and they tell us, no, I'm perfectly happy. There's nothing right now in our code, I think, that says they cannot sleep in their car.
Limit the parking times, like no parking here?
Well, you can, and it's challenging. You would know this living near that area. If we do as an example, North Branch Library, you can't park there. I think it's between the hours of 5 a.m. and 7 a.m. or 4 a.m. and 6 a.m. It's to make sure that the lot is cleaned out every day. It's cleared out so you don't have just stationary activity. If we do something like that, there are a number of folks who live in the apartments near Dominguez that would have a hard time finding alternative parking. So we've been resistant to that.
For the on-street parking, I get that. But if, like, the parking lot inside the park.
It's the parking lot inside the park. Whether it's right or wrong is used by a lot of our apartment owners as well. Or not owners, renters. So it's been more sensitive in Dominguez because of the local situation. Okay. But it's not a... There's pros and cons to that parking restriction.
Okay, thank you.
In that same vein, to jump ahead for a second, please, Mike, for decision package 83, the grant writing consultant services. Yep. So hopefully, I think the $75,000 is a worthwhile investment. The city's been in need of grant writing for quite a while. And it can, I think, pay us back as a return on that investment, to be certain. My question is, some of the grant consultants, or do some of the grant consultants get paid on a commission basis?
No.
They don't. It's just a straight fee.
Yeah, we've talked to them about that. We have an RFP out right now. We've got some responses and we're evaluating those responses. And one of the questions we've talked with the industry is they can't work on a commission basis. In fact, I think I don't want to call it an ethical dilemma, but there is some restriction that does not allow them to do that.
Okay.
So they work on a fee. So in effect, we would pay them a ongoing rate to monitor grant opportunities as just a general fee. And then based on opportunities that we ultimately pursue, there's a bit of a T&M contract structure for that grant writing effort. So we're going to make some assessments and guesses as to how many grants we think they might write a year for us. We'll probably create some flexibility in the contract theoretically to give us some additional opportunity if we miss it. But yeah, it's a combination dedicated contract cost for scanning and facilitation, and then there's a T&M.
It's not just matchmaking. They will go out and try and get the grants, right?
They'll
Write up
draft
the
it
proposals.
and lobby it. Yep.
Great. Okay, that's great. Thank you. For item 52, which is the referral recruitment program for emergency communications, how does this tie in to the study that you're doing to retain and recruit employees.
Yeah.
Is it something running parallel? Because we've got a cost associated with that. Or are we going to start up a recruitment process before we know how much we should be putting out there to pay for recruitment?
I think it would be, we would be implementing in parallel, but the retention, no, I shouldn't call it retention, it would be a referral and bonus recruitment program would be a shot in the arm. Not something necessarily we would sustain long-term. It would help us shore up current needs. Right now, recruiting for particularly the police officer positions is a very competitive field, just flat out competitive. I mean, you all know this. It's never been more challenging to be a police officer, just period. It's a very difficult job, and it's very difficult to be qualified both academically and physiologically and mentally to handle the stresses of the job. And, you know, it's anything we can do to incentivize quality applicants or laterals is, I think, money well spent. But to answer your question, the benchmark study that we're doing ideally wraps up in sometime during the calendar year and then allows us longer term to assess where we are in the marketplace and make changes as needed. And then theoretically, if we adjust ourselves and are competitive enough in the marketplace, we wouldn't need short-term incentives to attract quality candidates. But we've got to wait and see that data first before we make any real commitments. So this really is a jumpstart shot in the arm for two areas where we're having trouble recruiting applicants. And you might recall at mid-year, we actually created a program, similar program, although it was also retention related, not so much referral and recruitment with our public works folks who have, been really, breaking their backs for the last couple of years during the pandemic. So, and we're having similar problems there, trying to bring in new workforce. So,
That's why I want to get more staff.
well, and this proposed budget includes restoration of some of those lost positions as well as a couple of new positions.
So, I'm sorry, go ahead.
If you don't mind, and I'm sure this is like opening Pandora's box, but a few years ago,
never.
there was a question of whether the city might consider contracting its dispatch services to South Bay Regional.
Yep.
I'm not sure that anything ever happened after that because they were changing directors and things like that.
We have,
And I know for sure across the country, attracting and retaining dispatchers, especially in smaller agencies like ours, is a horrific problem. South Bay being much larger, having more flexibility in their staff, is that once again a thought on the table? And
It's never left. It's been a thought consistently, and we continue to ping them to talk about it. At first, it was a change in directors. Then it was they were getting their own financial house in order. They had servicing their own communities was becoming problematic. Candidly, they pay their dispatchers significantly more than we pay ours right now, much more. We have repeatedly asked them for a quote. We've been told once they sort of settle in and they have an understanding of their own metrics, they would be willing to offer that for us. But there was some resistance by the RCC's board to go ahead and offer that until they got kind of, as I said, their house in order. So I think at some point we'll get one from them, and it's constantly been something we've pinged them on, and I would love to compare and contrast the two options.
well, the world has also changed very dramatically since all of the South Bay cities are all on INSB. They have no changes to any of their hardware in order to make this work. So,
Yeah, the compatibility, and we went to Mark 43, our CAD and RMS has
Same
been
CAD
updated,
RMS,
so
right.
we don't have, that transition isn't a challenge at this point. It's really just a matter of cost effectiveness and pros and cons, the two options.
Right, okay, thank you.
So I just have a few more items. Thank you all very much for your indulgence. I apologize.
Well, this is a good discussion.
Item 71, I'm very happy to see that in there. I'm hoping that the city council adopts some funding for the campaign finance investigations. General overview, I was really happy to see in the budget the line item descriptions of costs, and all those expenditures that I know that this commission lobbied for a number of years, the city council had asked for, and I know that's a really big lift for you and your team, Jennifer and her team.
Yeah.
So thank you very much for doing that. It's really nice to see in the booklets all those line items.
Yeah, no, I'm glad it's something you find value of. It did change the formatting, the book, and we're open to suggestions on future formatting. Jennifer has been, listen, I mean, we knew it was going to be a challenging year. Marnie had 30-plus years of institutional knowledge. We have done the budget a certain way. Jennifer's come in and really worked hard to try to modernize our process, and she's doing some of that through using cubes and some other things. So some of these reports we're trying to do an efficient way. If there's anything in there that it looks much different than last year. So it truly does. So if there's anything in there that you think's missing, tables or summaries that you would like to see, we're all ears. It's not a perfect format, but it does reflect, I think, as you pointed out, some of that line item request. So
Yeah, just an example here is when you have expenditures by department and represented in a number of different formats, whether they be a line item for a detail of everything we're spending money on, whether it be a pie chart to show, to make it a simplified format, whether it be expenditure by department listed across and going by fiscal year. All of these things are, to me, dramatic improvements in the budget for us to review, for the public to see, for transparency. And quite frankly, I do recognize that it's a really heavy lift to do that, but I think it's worth it, and I'm really glad to see it. I don't want to speak for anybody else, but a number of people up here have asked for that, and that you're responding to that is just really grateful.
Yeah, no, and we are happy to, and I know Jennifer's been in dialogue with many of you on what you'd like to see, and hopefully we're accomplishing that. And like I said, I do want to let you know, we are scrubbing the budget. There are going to be some, because it's so new, there are going to be some roll-up formulaic things that probably are going to need refinement and adjustment. We're going to have some errors in there that aren't going to flow through necessarily to our fund balance issues and things of that nature, but just know that we'll probably be tightening up these formats a little bit in the future, as we get better at it.
And all of that being said, there were some questions that I have, just general questions on the budget representing some of what you just described. So I'm going to save those questions for our June the 9th meeting, rather than getting to that here, knowing it's a living, breathing thing and having all of us dig into it a little bit more. I will ask about one thing, because it would be something you'd have to bring back. Now to the June 9th meeting, which was, I was confused in trying to reconcile how much we're spending for outside counsel in the city attorney's office. Because there's a segment in there for prosecutions, but we do some of our own prosecutions. And then there's segments in there for our litigation, our civil litigations. So I'm not interested in trying to get into any kind of detail where it might influence or expose strategic initiatives. But just what is the round number that the city outsources for all legal
Pure
expenses?
outside counsel for both civil matters and litigation
And
matters.
litigation matters, yeah,
That spans
prosecutions.
over two funds, which is why it's challenging probably for you to spot that.
Yeah, I was trying to reconcile
I'll see what we
where
can
it's
do.
happening. Just to get an idea or a handle on it, because it may or may not then be represented, because it spans different funds within the city attorney's budget. The city attorney's budget was almost $5 million.
Well, the city, it should, the ISFs that might capture that, some of those litigation charges are in our self-insurance fund, but those would be allocated back to the city attorney's office through
Okay.
our ISF formula. So that total amount, that 5 million, should be reflective of total cost.
Right.
But it may not specifically cite the outside legal work.
Yeah, so for the transparency and line item that we're seeing, not that Mike's
Yeah.
office is not being transparent, they're being very
Right.
transparent. Just
Certainly
to
understand, yeah.
have it a little bit more of an ABC rather than trying to, we're fluent, you're far more fluent than all of us, and we're a little bit more fluent than the general public in those things. To try and break it down to the old Denzel Washington line, explain it to me like I'm a fifth grader.
Yeah, right. No, certainly understand it. It's a fair question. I'll see what see if we can get you a figure on the 9th.
Okay, and then also, as Commissioner Conroy brought up, really like having the shorthand version of all the decision packages there as well. Also very helpful.
Well, great. I hope the message, I'm open to critique on that too. I hope the message reads clearly for you directly. If there's anything in there you think would be helpful in the future, I'd love to hear it.
Okay, thank you, Mike. Thank you, commissioners, for indulging my time there.
Thank you.
No problem at all.
Good
Any
discussion.
further questions of Mike?
Are there any opportunities for revenue enhancements that
Yeah.
we don't see?
Thank you for the question. Yeah, in fact, I do talk a little bit about that in the message. There are a few things on the horizon potentially, and I bring them out in the message because as we think about, and I talked earlier in the presentation about structural balance, I believe we'll be structurally balanced going into next fiscal year, assuming there's not any major change in the economy, which of course could potentially happen. There are always. But when the council thinks about additional debt service borrowing, right? Or thinks about, when we think about at some point having to pay our employees more, particularly in an inflationary environment, we are, there's always pressures, expenditure pressures, right? So I want us to think about revenues that can align with those pressures in the future, certainly as it relates to debt service. But a couple of things that come immediately to mind that I think are on the horizon. Of course, the amounts are still somewhat guesstimates, but the cannabis initiative, the tax from cannabis sales, if the council does adopt a municipal ordinance to allow 2 retailers in the community, and we are successful in implementing fees, which we certainly hope to be, and or a 5% tax, which the council has directed us to work on as part of the March 23 ballot, that potentially generates for us anywhere from $1 to $2 million in new general fund revenue at just those 2 sites alone. Legato, project that's been under construction for quite some time, is slowly coming out of the ground. You set the sort of housing component of it aside, which will generate new property tax revenue, although new burdens with it. The hotel site itself, once renovated, is easily $1 million a year TOT generator for us. It will be a quality hotel. If it's built as designed, should be a really high rent property for us from a TOT standpoint. So that's $1 million potentially online in a couple of years. The Galleria, I'm happy to report, has submitted plans for permitting, not entitlement, but permitting and building of the revitalized South Bay Galleria, which is exciting. That easily, once operational, which again, a couple years away, could easily be a couple $1 million a year of net new general fund sales tax revenue.
And the Quimby funds are triggered at occupancy permit or at
Vertical
building permit?
construction. Vertical construction. So demolitions, groundwork doesn't trigger it, but once you pull your permit to go up, you have to pay it. Legato will have to do the same thing. Once they go up, they'll have to write their
A lot of
Quimby
Quimby
check.
funds coming in from those 2
Yep,
projects.
a lot of Quimby funds, particularly the one at the Galleria, because they're subject to the current fee of
$35,000.
Yeah, per unit, which is big. So that's another potential revenue source. Another idea and there's a decision package that touches on this, and I've got to give Nilesh some credit for doing some research on this as well. We currently prohibit our short-term vacation rentals. While we have a prohibition and we enforce on a complaint basis, if you go online right now, you could find roughly 200 properties marketing themselves for short-term rental. Surprisingly, we don't get that many residential complaints for the use of those properties. If we eliminate the prohibition and actually collect TOT, transient occupancy tax, for that program, that in itself would generate $1.5 million a year. And that's with just the current inventory that's underground, theoretically.
TOT plus licensing fees.
Plus licensing fees. I mean, really, Palm Springs, although we are not a good comparison in this case, generates almost $16 million a year in short-term rental TOT. $16 million a year in short-term rental TOT.
Airbnb can make it easy for the city to collect.
Could make it easy. And most of those programs, if you actually permit it, they buy in. They monitor. Homeowners who are participants buy in on self-monitoring. They install cameras, they install noise monitors, because they recognize if their program goes bad and you create tight restrictions, you're off the roll. That's a huge revenue source for certain owners. So we think it's worth exploring. We think it's potentially a good source of revenue for us in the future. So that's in there. So yeah, thank you for the question. There are some revenues on the horizon.
Your department or the finance, I love that you're thinking outside the box. Or are these ideas just coming from different?
Well,
different
the
parts?
our collaborative effort, right?
Yeah,
All our subject matter experts come together and present. It's really my charge to think about revenue largely. It's something I do think about quite a bit. So some of that is my office, just really pouring over opportunity, because look, we know we're very good at expending money. We all know that. But revenue, it really does all start with revenue. We can't spend what we don't have.
Are our sales tax and TOT projections inclusive of the 2 beach life festivals?
They are. And as our TOT, which is probably the biggest accrual.
Beneficiary of that.
Beneficiary of that program. Property tax has been our shining star for years. Redondo Beach our property tax revenues have just continued to climb 5, 6, 8% a year. They've been game savers for us. And I thank the school district in large part, the investments that they made years ago, the bonds that the community ultimately supported have paid dividends. What you have to pay to enter our community now as a homeowner is pretty staggering compared to where we used to be. So that's been that's really been our strongest revenue source and continues to show good upside. At some point that will plateau and fall off a touch, I think, but there's a lag, as we've talked about with property tax revenues. It takes a few years. We're always behind the curve one way or the other while the market's going up or going down because the assessment is always in arrears. So that continues to be strong for us. But yeah, we're open to any revenue idea, always. If you've got one, we'll take it. We'll think about it. It's what we have to do to be successful. The state doesn't do us any favors. And I'll tell you something that our neighbor, we've talked about this before, our neighbor's going through it right now, Torrance. If you believe that the county or other regional county agencies are eventually going to pursue sales tax increases as a means to pay for regional programming like Measure H or Metro or the like, if you're pessimistic that way, the other side of my brain says maybe it should be us and not them because there is a cap to ultimately what can be levied. Torrance is going out and chasing a 50% sales tax measure right now. We thought about pursuing a 3/4 sales tax measure ourselves, a 3/4% sales tax measure that would have generated for us at the time, this was 4 years ago, $7.5 million a year in new sales tax. Right now, that number is probably closer to 10. That's another way to really generate additional revenue to the community. And if more of our neighbors ultimately increase their local sales tax, it's a challenge. And we'll see what Torrance does. I don't know. It may not pass.
With inflation, even with this, because it's a percentage charge, we're getting an increase due to that as well.
We are, and our sales tax projections are way up this year over year. They're as high as they've ever been. Yeah. And certainly when the Galleria gets humming again, as it should, we'll do much better. And as I've said to all of you before, we do better in the LA County sales tax pool as our local brick and mortar performs against our peers, right? We receive a pro rata share of the sales tax pool based on our own brick and mortar performance. As our brick and mortar performance grows, we get a greater percentage of the sales tax pool, which is only going up as more and more people shop online. So the better we do locally, the better we'll do as a share of the collective. So yeah, it's a tough one. I'm not proposing the sales tax, bringing that back. We talked about it. Council was one vote shy of issuing an urgency ordinance that would have been necessary for us to have a special election for the tax. But if you're thinking about protecting local control and local revenue, it's not the worst thing to contemplate.
It's a 50% threshold, not 66%.
Right? Unless you identify specific uses for the money in the event it passes. I mean, why we would do that doesn't make any sense to me. It almost seems like a sort of a backwards threshold requirement. It seems like if you identified the source for the community, it should be a lower threshold. But if you keep it generic, it stays at 50%.
Well, the marketing in Torrance for the tax increase has been related to public safety, and the public safety organizations are spending a bunch of money to push it through.
Yeah. It'll be interesting to see. It failed a couple years ago at 75 cents. I wonder if this one will pass.
Does the Redondo Beach Performing Arts Center, does it generate any revenues?
It does. Pre-pandemic, it generated almost $1 million a year in revenue. We spent that and more, but you spend a good $400,000 a year just having it. Just by way of our allocations and utilities and the like. But revenue is starting to climb again. LA Ballet, I think this year, actually it was potentially not going to happen. It is going to happen. We're pretty well booked out this summer. So it's coming back online post-COVID, but it's still not at normal level yet.
Did you say it was operating at a deficit prior to COVID?
It's always operated at a deficit. Okay. Yeah, but
ISF charges.
Yeah, just due to ISF charges. So we allocate almost $400,000 in public works and other charges to the facility just based on its square footage. if former cultural arts managers and the like would tell you, yeah, well, we're operating in the positive if you take away those sort of general allocations. The city manager and me would say, well, no, you got to pay your fair share of costs. So, but the fact that we almost got, there were years where we were maybe only subsidizing to the tune of $60,000 or $100,000 for a facility that used to be subsidized to the tune of $800,000. In fact, when I started in community services back in 2006, it was almost $1 million subsidy for that facility. So we've come a long way operating out there. We do much better today.
Public amenities like that are always a loss leader, though.
They are.
You're hoping that people come into the town as a loss leader to the Performing Arts Center, get gas, eat dinner, shop, do something else.
Yep.
You have big events at those places in order to try and offset it some other way.
Yeah. And the fact that we were even close to breaking even is really is a kudos to the department, because most of the time communities are subsidizing that very heavily. I mean, every park, every recreational facility is going to receive some level of subsidy. It's just the nature of what you do.
Goes back to the quality of life, right?
Yep. Right. It's what sets you apart. It's part of the quality of life experience.
Okay, wrapping up discussion on this. Do we have any public comments?
We don't have any public comments and we have no e-comments.
Let's talk about the June 9th meeting before we go to the next topic. What input do we think is necessary for that meeting? You'll be here?
I'll be here again. Yeah, you'll see me again. Is there any department? I know I've heard Keith. Obviously fire's always big. We'll have Keith here, assuming he's available. He better be. You guys tell me. Is there anything else? Any other areas of concern that you think are going to be, going to require some real deep diving?
Well, if we're talking about the CIP, it might be helpful to have
Ted and Andy
Ted
available.
or somebody else here for that.
Yeah, we didn't do much of that today. It's a good point. Yeah, I'll see if I can get Public Works here for that.
So that's going to be our main opportunity to discuss the decision packages as well as the proposed budget?
You can talk about anything on the 9th. You can talk about the CIP. You can talk about the decision packages. You can critique our tables. I mean, whatever you want to do. Although if you've got specific table critiques, I'd love to hear them before my budget response report number 1 goes live on the 7th, because I can still make, I think, accretive changes to them so it's clear, so the council can act on, more accurate information table to table. So, you all know where to find me.
And Mike, you may have said this, I think you did already. For the BRRs that you release, will Jennifer be sending those to us?
She will. Well, as soon as the package goes live, the June 7th staff packet for the mayor and council, we'll forward you a copy of that.
On or about June 2nd or 3rd?
Yeah. I can't remember exactly the date.
2nd is a Thursday?
Yeah, it's a Thursday and it's a short, and I think it's a city hall closed Friday. So, but candidly, it may be that the packet goes out Friday morning. It may be, I might be finalizing it here. So it'll either be Thursday night or it'll be Friday morning, the 3rd.
Yes, the camping ordinance was being violated in your parking spot over the course of the last month.
Yeah. Thankfully, we don't have a minimum parking requirement.
As the city manager's car was here nonstop for 7 days.
Yeah, I appreciate the question. I would have loved to be at Beach Life, but no, Yeah, it was I mean, I give Jennifer a lot of credit. She persevered. She wasn't feeling well, and we got it done. But it was definitely less than ideal circumstances, for sure.
Do we want to have the fire chief here, the 9th?
I think we should, if we can, I think have Chief Kaufman here would be great. Thank you. Yes, I agree.
You don't have any questions on, the library stuff's straightforward. We talked about that before. Community services, I think I can speak to all those issues pretty clearly. Yeah, I'll bring Keith, and you got a pretty lengthy presentation from Chief Hoffman here recently. And PD's requests are fairly minimal this year. It's pretty straightforward stuff, so.
In point of fact, some of the things that we might ask about are discussions that we had when Chief Kaufman and Chief Hoffman were here.
Yeah.
But I think with the new decision packages are more fire-centric than they are
They really are.
PD-centric.
There's far more fire packages here than there are police. And that's really a direct relation to the assessment, responding to the assessment. But yeah, I'll have Keith there, and I'll try to have Ted and or Andy here so we can talk CIP.
Okay, good. Can I get a motion to receive and file this report?
So moved.
Second?
Do a roll call vote.
Yes, please.
Commissioner Conroy,
Aye.
Commissioner Jesty,
Aye.
Chair Woodham,
Aye.
Commissioner Marin,
Aye.
Commissioner Samples,
Aye.
Commissioner Solomon.
Aye.
Thank you.
Excuse me a moment, Chair Woodham. Mike, are you staying for the rest of the meeting?
What is the next item? I don't,
It's
I don't,
the
would have been the CIP, but I think we just.
5-year financial plan assumption.
5-year financial plan.
oh, I was going to head out for that. I think Jennifer was going to cover that one. But
Okay.
if you need me, is there something you need me for there?
No, I think if Jennifer's going to staff it through there, I just was curious at the end towards the referrals, if we were going to get a similar financial impact report from Beach Life. But I'll ask
I can answer that question for you now. I know it's a little out of turn, but I haven't talked to Alan. I owe Alan a call. We're in the process of debriefing. I suspect he'll commission a similar report. I don't know if it'll be at the same level of detail, but I'll talk to him about it.
Okay, thank you. Thank you for tonight.
Always a pleasure to see y'all. We'll catch you again on the 9th, if not before.
Appreciate it. Thank you.
And listen, don't be a stranger. If you got anything you see, and you want to, reach out to Jennifer, reach out to me. Always, doors always open.
Okay, item J3, discussion and possible action regarding the general fund 5-year financial plan assumptions. And so is Jennifer going to lead this discussion?
Hi there.
Uh-oh.
The grand
How are you
Is
feeling?
Jennifer real?
She's the woman behind the curtain.
Hi, everyone. Sorry. It's a little hard to talk. I'm going to do my best.
I'm glad
Thank
you're
you
there.
for your patience. Can you all hear me?
Yes.
Yes.
Okay. So first, I just wanted to talk through a little bit. The 5-year assumptions, my understanding is they're not in the proposed budget. They're in the adopted budget. And so my first question was because, especially with the blue folder item that Chair Woodham and I had discussed, I had more updated revenue projections literally a couple of days ago that I think would really inform our decisions in this projection process. So I'm just curious about the timing, if now is a good time to discuss this, or perhaps it sounds like June 9th might be pretty busy, but would July be a good time to discuss this when we have more information and the budget is finalized as we look forward the next 5 years to have more accurate information to project?
I would think so.
Is there anything that we do tonight that affects the budget?
Not the proposed budget. So what this is in the adopted budget, there are sections that are we call them the scenarios section. So there's worst case, probable case, and best case.
Right.
And my understanding is from working on the adopted budget and now working on the proposed, this is not in the proposed, it's only in the adopted budget. And so, especially since, Chair Woodham had requested more actuals to inform our decision. So I had added in some prior year actuals. And that kind of got me thinking, would it be better to have more actuals data? And plus, so I just got new sales tax projections for projected FY22. I think it was just a couple of days ago. And so I think the more information that we have, the better informed our decisions are about projecting this 5-year future forward thinking.
I think that's a good idea. Jennifer, I'd make a motion to continue this item to July if there wasn't any discussion from the commission.
I agree.
There, your second?
I'll make the motion to continue this agenda item J3, discussion and possible action regarding general fund 5-year financial plan assumptions for our July 2022 meeting of the Budget and Finance Commission.
Second.
Do we take any public comment before we do that, Doug?
Yeah, we would. And there aren't any comments. There's not anybody online here for this particular item.
Would also give Jennifer a chance to rest.
Yes, recover.
And then I'll be there, which will be really much more pleasurable for me.
I keep hearing Jennifer's voice. Is she real?
She is.
So
Okay,
Roll call
Roll
vote.
call vote. Commissioner Conroy,
Aye.
Commissioner Jesse, Chair Woodham,
Aye.
Commissioner Martin,
Aye.
Commissioner Samples,
Aye.
Commissioner Solomon.
aye.
Okay, move on to agenda item K, member item referrals to staff. Let's start to my left, referrals to staff.
I just wanted to thank Mike and Jennifer again for the proposed budget, and like Commissioner Solomon said, a lot of great improvements here. A lot of things are easier to follow, read, and understand. So it's a fantastic step in the right direction. So that's all I have.
Okay,
No, I don't have anything.
none from me.
Nothing from me.
I'm fine, thank you.
It's not so much a referral, but a request of our fellow commissioners and of our staff members. Starting June the 2nd, the City of Redondo Beach has organized a charter review committee to review and examine a certain outdated or in need of update portions of our city charter. Commissioner Woodham is an alternate on that committee, is on that committee along with myself. Part of that involves a lot of the things that we've discussed here at the commission level, including things like updating our codes for what is a CIP, where it's currently $15,000 and not indexed for inflation. So I would ask, based on the discussions that we've had in the past, if the commission members would reach out to the city clerk with ideas of what might be in need of update that we've heard here. Part of it also is the consideration or question as to whether or not we have an elected city treasurer, clerk, and city attorney, which we examined here as a commission as part of the Moss Adams report in the roles and responsibilities. So commission members who were here at the time and have participated in some of those discussions, if you have ideas of things to weigh in, please weigh in to the city clerk so that those things can be discussed at the city charter review committee hearings. And I'd ask Jennifer if there's things that stick out for you and your staff that you could maybe, or are in need of update that you've seen or would like to see discussed, to please send those over. So it's not a referral so much as a hope for all of us to weigh in if you so choose. I think it'd be really valuable, especially from the members of this commission having discussed so many of those things.
Good.
Are you looking for things as bullet items and topics, or are you looking for detail and comparisons? How detailed do you want that kind of, how detailed would you expect that discussion would be going to the city clerk?
I would think it would be a bullet point idea of the CIP is only $15,000. That's badly in need of updating. Could you have that discussed at the committee?
Okay.
Something, a broad topic for them to decide whether or not to put on the agenda or for to discuss things that have come up within our commission meetings that we said, well, that needs to be changed, that needs to change, that should be updated, and it hasn't happened yet.
Okay, thank you.
That would be my hope.
What is the goal in terms of, or I guess, in terms of timing? In terms of the charter review, the discussion, how long, like, how often do you guys meet? And what is the goal in terms of like really trying to actually revise and update the charter?
Yeah, I don't want to, I appreciate that. I don't want to get into a non-agenda discussion, but the first meeting's June the 2nd. Those are the topics of it. My understanding is that it has 6 meetings, but a lot of those things will be discussed at the first meeting and decided upon at the first meeting. So tune in for that. It's a lot of those things, they're not on our agenda. I don't know if we're allowed to discuss them. Just to hope that we funnel information there.
Add to that, I think that commission will try to have a report out in time for action prior to the vote or the vote in March of next year.
Well, if it's a city charter amendment, it has to be on the ballot. So
Yeah.
either it'll happen in time for March or it'll be 2 years after that. 2 years or a year?
2 years.
2 years.
You're right, it does have to be on the ballot.
2 years. Okay, so that's all I had. Thank you very much to the staff, to Jennifer, everybody watching. Thank you very much. Have a good night.
Okay, we are finished with the agenda. If there's nothing else, do I hear a motion to adjourn?
Second.
There's no roll call needed on this one.
adjourned.
Okay.
Thank you.
Thank you,
All in
everyone.
favor, say aye. Aye.
Thanks,
I
Doug.
will see you.
Thank you, Jennifer.
Thanks, Jennifer.
You.
Wherever you are.
Hope you're feeling better.